I'm Michael Sabo, Senior Commodities Broker with RJO Futures, here on the floor of the CME Group, bringing some commentary here in the energy markets. So let's get started here. Let's talk about here September crude oil. Prices hovering around the 106.25 area. We've seen kind of two-sided action in here. Taking a look at the EIA data that came out, we saw another draw here of 6.9 million barrels. Traders are looking for about a 2 million barrel draw. So we've seen certainly the trend has been here over the last several weeks. Remember here, the last EIA reports, 10 million barrel draw, 9 million barrel draw, now almost a 7 million barrel draw. So the stocks have been kind of coming down, and they've got some pipelines situated, and they're moving some of that glut out. But nonetheless, if you take a look at the price action in oil prices really haven't spiked at these levels. I think the market's in a bit of some consolidation right here. Now, taking a look at refinery capacity utilization, which creeped up slightly from the last report, we're now sitting around about 92.8%. It's a 0.4% increase. Looking at year over year, last year this time, refineries running about 92%. So pretty much in line, although slightly, just a touch firmer there for the demand side of things. But nonetheless, you look at the overall stockpiles of crude right now, and we're still sitting around total stocks about 367 million barrels. 5-year average is around 344 million barrels. So we still, in my opinion, have quite a bit of oil out there. Now we are off the highs, by about 30 million barrels here. When things were kind of peaking here most recently, we were in the mid 390s, but nonetheless, I still think we got adequate oil out there. I think part of the reason here why you're not seeing prices move higher is that if you take a look from the June 24th lows, we've seen a 16% increase in the price of oil. It's been a pretty big spike here to the upside. And I think the market may have moved a little too quick, too fast. We're getting some consolidation right here, short of some really fresh, additional bullish news. I'm not quite sure if the market's going to be able to push any higher. If it does, we could push around the 110 area, but I got to tell you, I'm still focused on the short side of this market. I think there's some great ways to take advantage of it using some option ratio spreads where you can limit your upside risk if crude prices should continue to move higher. So give me a call, shoot me an email. We could talk a little bit more about that if you have some interest. Taking a look at some of the complex here, in the EIA report here, we saw a build in gas stocks of about 3 million barrels. Distillates, we saw a build there of about 3.9 million barrels. So we are seeing, product builds here. So, that could also kind of help, mute some of this oil rally too, especially if we start to see the demand start to taper off here just a little bit. We haven't heard a lot about fear premium in the market here right now, although I still think there's quite a bit of it out there. Egypt, Syria, Libya, those things have kind of taken a back burner here right now as the focus has been on, for example, Bernanke's testimony here and kind of, going back and forth on this Fed tapering. He threw it out there here, a couple of weeks ago, kind of retracting it a little bit, suggesting that, interest rates are still going to remain considerably low for an extended period of time. So we got to watch that a little bit, but I don't think that there's going to really be anything done with that. I think that was just kind of testing the waters a little bit. So I'm not looking for that to happen here right now. I think if we see equities, though, start to pull back a little bit here, that'll be the signal and the key for aggressive traders to start possibly shorting oil short of a major bullish event there. So give me a call, shoot me an email. I'll be more than happy to talk with you. Again, I'm Michael Sabo, Senior Commodities Broker with RJO Futures here on the floor of the CME Group. And of course, remember that futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.